Welcome to The Explainer. All right, today we're jumping into a world that feels like it's straight out of science fiction, but has very real money behind it: quantum computing investments. We're going to break down who the players are, the different ways you can invest, and what you really need to know before you dive in. Okay, so let's start with the big idea here. At its core, quantum computing is a mind-bending leap in processing power. We are talking about a technology that could solve problems that today's supercomputers, even the absolute best ones, they just can't touch them. So, what's the magic trick? Your phone, your laptop, they think in bits. That's a simple on or off, a 1 or a 0. That's it. But a quantum computer uses what they call qubits. And a qubit, well, it can be a 1, a 0, or somehow both at the very same time. This ability to explore tons of possibilities at once is what gives it such incredible power. And this is the number that makes Wall Street's ears perk up. McKinsey is projecting that the quantum computing industry could be worth a jaw-dropping $198 billion by 2040. I mean, think about that jump. We're talking about an industry that's only around $1 billion or so today. That's the kind of explosive growth investors dream about. So yeah, when you see a number like that, it's really no surprise people are calling this the next big gold rush in computing. You've got companies, investors, even entire countries, all scrambling to get a piece of what could be one of the biggest technological shifts of our lifetimes. And what's so wild is just how far-reaching this could be. This isn't just about making faster computers. Quantum could completely change the game in so many industries. I mean, we're talking about literally designing life-saving drugs atom by atom, creating cybersecurity that's actually unbreakable, or even building artificial intelligence that's way more powerful than anything we have now. All right, so if you're thinking, okay, I get it, this is huge, how do I get in on this? Well, when it comes to picking stocks, you've basically got two main roads you can go down. On one hand, you have the pure play specialists. Think of these as the all or nothing bets. Super high risk, but, potentially super high reward. On the other hand, you've got the big, diversified tech giants. This is a much safer, more indirect way to get a piece of the action. All right, let's talk path number one, the pure plays. Now, this is the high-stakes table. These are the companies betting the entire farm on making quantum computing a real commercial thing. So who are the main players here? Well, you've got IonQ, which is kind of the poster child for the group. Their tech uses trapped ions. They're literally using lasers to hold individual atoms still. Super cool stuff. Then you have D-Wave Quantum. They're all about something called quantum annealing, which is perfect for solving crazy complex optimization problems. And then there's Rigetti, focusing on superconducting qubits. Now just look at those market caps. We're talking billions of dollars for companies that are still in the very early stages. That tells you everything about the hype and the hope baked into these stocks. But, and this is a huge but, you have to get real about the financials. Almost none of these companies are profitable. They're burning through cash from investors just to keep the lights on and the research going. Their valuations? They're pure speculation on the future. It all comes down to their cash runway. How long can they survive before they need more money? You can see it in the analyst ratings for IonQ. A lot of hope, for sure, but it's hope built on a very speculative foundation. Okay, so if that sounds a little too much like a roller coaster for you, there's path number two, betting on the giants. This is a whole different ballgame. Much safer, much more diversified. And yeah, you're going to recognize every name on this list. You've got Google's Quantum AI Lab, Microsoft's Azure Quantum Platform, good old IBM, which has been in this game for ages, and even Honeywell, which owns a big piece of a top quantum company called Quantinuum. The key here is that for these behemoths, quantum is just one piece of their massive business puzzle. So what makes this the safer bet? Well, it's pretty simple. A bad day in the quantum lab for Google isn't going to tank the stock, right? They've got billions rolling in from search and ads. They have these incredibly deep pockets to fund research for decades if they have to, without breaking a sweat. So with these stocks, your investment isn't a direct bet on quantum success. It's more of a stable, indirect way to get exposure to the growth. Okay, but let's say you don't want to be in the business of picking individual stocks at all. You don't want to bet on just one horse, whether it's a risky startup or a slow and steady giant. Well, that's what exchange-traded funds, or ETFs, are for. So what's an ETF? Super simple. It's basically a basket that holds a bunch of different stocks all at once.
So instead of buying just IonQ or just Google, you buy one thing, the ETF, and you instantly own a tiny piece of the entire sector. It's diversification made easy. And when you look at quantum ETFs, you can see a few different flavors. You've got Q2M, that's the big one, the most well-known. It's a pure thematic play. Then there's a newer one, WQTM, that specifically targets just the startups and leaves out the mega caps. And then, of course, you have broad tech ETFs like IYW. They're not quantum ETFs, but they hold so much Microsoft and Google that you get that quantum exposure by default. And look, the fees, the expense ratios, are all pretty competitive. So if we zero in on the two ETFs that are really focused on quantum, QTUM and WQTUM, the choice really boils down to your strategy. Are you looking for broad exposure to the entire quantum world, including the companies that build the gear that makes it all possible? Then QTUM is probably your play. Or do you want a more targeted, maybe higher risk, higher reward shot at just the pure play startups? Then you'd look at WQTUM.
Okay, so we've covered the pure plays, the giants, the ETFs. A lot of options. So what's the bottom line here? What's the playbook for someone who's looking to invest? You know, I think this quote from the source material just nails it perfectly. The quantum computing boom should be lucrative for well-prepared investors, but it's likely to be a marathon rather than a sprint. That's the key. This is not a get-rich-quick scheme. It is absolutely a long game. And this timeline really shows you why it's a marathon. Look where we are now. Early days, high speculation. We're probably still a good 5, maybe even 10 years away from seeing real, widespread commercial use. But if you have the patience to wait, that 2040 market potential is, well, it's huge. So if you're actually thinking about putting money into this space, here's your final checklist. Step 1, acknowledge the risk. Say it out loud. This is speculative. This is long-term. Step 2, choose your path. Are you a high-risk, pure-play person, a stable giant person, or a diversified ETF person? Be honest with yourself. And step 3, think long-term. You have to have the patience to ride out the bumps, because there are definitely going to be bumps. So let's end on this. The consensus is pretty clear. Quantum computing is going to be a massive disruptor. It's coming. The real question for you, as an investor, isn't if you should get involved. It's how early you're willing to take a seat at the table.